Okay, well, thanks for joining me today because we've got an interesting market going on, a lot of volatility. We haven't seen volatility like this in quite a while. So what's really going on? Number one, there's profit taking going on. Let's face it, the market has gone almost straight up since basically since the election of Trump back in November of 16. So I'm not terribly surprised that this is long overdue. So that's the first thing. The second thing that's going on, and reason that people are getting a little bit nervous, is because interest rates are rising. Why are interest rates rising? Some people are afraid that inflation is going to be happening, which actually is okay because part of that is because business is good and labor is short, etc. So, higher interest rates is okay, but it's spooking a few people. So they're afraid that maybe the stock market's going to go down. So some of those people are selling. The last thing that I think is causing this to happen is really there's some forced selling going on because of some securities that some hedge funds and maybe some others, maybe the retail investors have been investing in. Let me just read to you what the name of one of these is. It's VelocityShares Daily Inverse VIX Short-Term Exchange Traded Note. Now what the heck is that? Well, basically it's a security that banks created because volatility on the marketplace has been so tame over the last few years. So to make it easy to understand, when volatility is very light, you can make money on these things. But when volatility spikes like it just did, well, you can get your head handed to you because they're leveraged. Now, when they're leveraged, it means you're buying things without paying full amount for it. It's like when you buy a house. Maybe you put 20% down, you're leveraged for the other 80%. Well, that's what's happened with these exchange-traded notes. So now how did that affect, and how is it affecting your investments and the stock market? Basically what's going on is those people that had these exchange-traded notes are getting killed, and they have margin calls. So the government's saying, hey, you've got to come up with some money to cover, or we're going to have to close you out. So what they're doing is they're selling what they have in their portfolio that is liquid. And what's liquid? Stocks that have just gone up. And they're doing it in spades. So that's what's going on. It's basically profit taking, rising interest rates that are spooking a few people, and some of this forced selling. How long will it last? I don't know. But let's wait until the volume on all this starts slowing down a little bit. Now, this next question is, are we in a bear market? I don't think so. I think this is a somewhat normal part of profit taking, and the underlying fundamentals of companies are really good. The tax cuts for corporations haven't even kicked in yet. I think that's going to happen. People have more money in their pocket, and basically I think that most companies are doing well. Even the ones that just came out with great earnings, all of a sudden you're seeing that that those stocks aren't going up. As a matter of fact, they're even going down. So hang in there. I get my best advice to you, basically, sit tight, stay calm, don't let the emotions take over. That's when we make bad decisions. And just look for bargains. They're going to happen. Don't know how long it's going to last, but once it's over, we'll know pretty much as the volume settles down, and then it's time to start buying again. I think the stock market goes back up. Just give it a little time. Thanks a lot.